Good morning and welcome to the Rate Update with Dan Frio. I am Dan Frio and this is your opening bell to real estate and mortgage rates. Sounds exciting, doesn't it? So let's get on to it. Let's get over what we do on a daily basis. We go over the economic news. We go over mortgage rates, what's going on with the MBS market, which is the market that basically controls mortgage rates. And then we answer the question, why is all this taking place and why is this all going on? So, and at the end of this, I'm going to show those out there that are building houses. You might want to lock in long term because those that waited are really getting burnt right now. So let's get on to it. The first thing we're going to focus in on what's going on with the economic calendar for today. So the biggest news we have right now is Federal Chairman Powell is going to speak in front of Congress here at noon. And basically, what are they going to do? They're going to grill him. And what they want to know, they're going to ask all kind of political questions and then a lot of BS. But what we really want to know is, dude, when are you going to start quantitative tightening? Okay, that's the biggest thing I'm concerned with. When they raise the rates 0.25% and so forth, that it does adjust the market, and with mainstream media hyping everything, it makes for fluctuations in the market. But we always heard of, and if you probably have as well, might not even know what it is quantitative easing, the old quantitative easing. What happens with that? It's basically when the Fed and the government, I'm making this in a roundabout way. I don't want to get too technical or economically with you, but they flood the market with stuff, money and so forth. What the Fed does is they went out and started buying corporate bonds for liquidity purposes. They've started buying mortgage-backed securities, which we're going to go over here in a second. Why? Is to keep rates steady and drive them down. Okay, so again, quantitative easing. They're looking to buy mortgage-backed securities and drive the rates down. So what would be quantitative tightening? In its simplest form, they're going to sell mortgage-backed securities. There's not a huge appetite out there for that bond anyways. So what's going to happen? Okay, that's just simple math, guys. Okay, so I'm not being the bearer of bad news. I'm going to show you what's been happening in the last year, why a lot of people should have locked in that we're building houses. So let's get to it. That's what we're going to watch today meticulously because they dissect every word that Federal Chairman Powell says. Okay, the rest of the week, here's what we're looking at. He's going to continue to speak tomorrow in front of Congress, and then we're going to have new home sales. There was 800,000 sales the previous month. Now they're looking at 810. And then one of the areas that I'm going to focus in on is crude oil inventories. I normally don't watch this area, but why am I going to watch it now? Well, great question. Think of oil. And I don't care what way you think of it, if it's the devil's blood or whatever, or the best thing since sliced bread, it just is what it is, okay? And it is a huge piece of our inflation. Why? Oil's darn near in everything. Check out, just Google oil. What does oil produce, or what is it in? It's almost in everything. Okay, so as oil prices go up, all the prices on almost everything's gonna go up. And I almost mean everything. Okay, so that's why I'm watching these inventory levels, because this is going to give us a bead on how bad the next inflation number is going to come back. Okay, then the rest of the week we have durable goods orders, initial jobless claims rate, and then pending home sales on Friday. So let's get over to the headlines. Treasury yields climb on the war. Let's go over where mortgage rates are for today. This is the national averages. These are not my rates. This is what's posted by Mortgage News Daily on a daily basis, and then national averages. So let's get over to it. You can see two cells here. The 30-year fixed and the 15-year fixed are just a hair below their 52-week highs. You're going to see those down in this area here. But we have the 30-year fixed coming in at 4.46, down. We haven't seen this in a while, down 4 basis points. The 15 years coming in at 3.84, down 4 basis points. The government loans, which is FHA and VA, is coming in at 4, flat. The jumbo is coming in at 3.95, flat. And the flat continues on through the 5-year arm at 3.82. Down through here, we're seeing the charts of what's going on with mortgage rates. I'm going to show you another chart to kind of freak you out here in a minute. But the sentiment right now in the mortgage-backed securities arena is significantly, not just weak, but significantly weaker. And I'm going to show you that here in a minute. But for those over time that are saying, Dan, you're fear-mongering, rates aren't going to move, well, let's go back and just see where we were 1 year ago. So a year ago, we were looking at rates on the 30-year at 3.09. We're not going to pay attention to this rate here because this is last week's number. This is from Freddie Mac. So again, we were at 3.09 back in March 18th of 2021. Where are we today? Right there. So I'm not fear mongering. I'm just giving you the truth. What happened though is a lot of people got pre-approved to build a home back in this range right here. A lot of people from July to September. Let's see where those rates were. So that we go through here and we see the rate on the 30-year back in September was 288, 288, 286, 87, 88, 888. So basically all the rates, probably the one you got pre-approved for that mortgage, was about 2.88, let's say 3. Okay, let's just round it to 3. Where are you today? Well, like I said, 4.4. So we have a long-term lock, and I'm just going to promote this rate here. What that does for you is it'll lock your rate up to 6 months with no cost. What happens is they take the rate for today and they add about 0.5% to that rate. So you might be saying, well, why would I do that? Well, I just explained to you. Last year we were 1.5 lower than we are now. So let's say, for example, you do that program and right now, instead of being at 4.4, you're at 4.9. Okay, but you're like, that's crazy. That's ludicrous. Why would I do that? It's an insurance policy. So lock in now. Let's say rates don't move. Okay, we just continue with your lock and close you. Let's say rates go up another point. Well, you're locked in. But let's say rates drop. Let's say the Ukraine war and everything gets escalated and it causes a recession and everything just goes haywire and rates go back down to 2.99. What do? We float you down or just change your loan and we move your loan to another company that we're set up with to make sure we capture that low rate for you. So basically it's an insurance policy. Look at it at that. So that's it for that realm. The MBSs, what are the MBSs doing for today? Down 31. That's not good. Why do I say that? Well, this is a bond. This is what's happening for the mortgage-backed security bond that trades on Wall Street. This number, when this number goes down, rates end up doing what? Do they go down or up? They go up. They have an inverse relationship. So when this number goes down, rates go up. So we love when this number goes up because rates are coming down. Well, we haven't seen an up in quite some time. You can see that down through here. Well, what's the sentiment for today? Again, it's negative. Okay, and we just saw that because of the Russian-Ukraine situation, inflation fears, and a ton of other things. If you want to stay tuned with all this news, what I suggest you do is subscribe to my newsletter so you can have access to all this stuff. I put out there a newsletter every day and one on Fridays, giving you week reviews and daily reviews. Here's all the stuff that's in there. This is the stuff that you're missing if you're not subscribed. How do you subscribe? Great question. Check out all my social media. It's on there. I just posted the subscription just a little bit ago. We just launched this a couple weeks ago and it grows by the day. So check this out. My video, all I ask you to do is please give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. What I love though is interactions. I have a YouTube live every Thursday and every Saturday. Please join those if you have any questions or put some comments down below. I answer every comment that you post. The initial comment, it's hard to keep track of all the trends, but if you post something there, I promise you I'll post something back. Or if you're like, hey Dan, I'd rather just reach out to you personally, well, shoot me an email. That email address is down below and it is also dan@therateupdate.com. But if we could be of any assistance, please give us a call at 844-775-5626. God bless, guys. Thanks so much for watching, and I'll be back later this afternoon with some good news for you.